Hey everyone, buckle up, because the US stock market is in full turbulence mode today. With a fresh wave of tariffs, tech stocks crashing, and traders rushing to safe havens, things are wild. Let's unpack what's happening and what you absolutely need to know to navigate this storm. So first, what's fueling this chaos? Former President Trump just threatened new 100% tariffs on Chinese goods starting November 1st. That spooked the market, especially tech and growth stocks. The S&P 500 slid 2.7%. Nasdaq dropped 3.5%, the steepest decline since April. Investors are running to safety. Gold and bonds are seeing inflows, yields falling. Also, looming over all this is political gridlock and the ongoing government shutdown, which adds to the uncertainty.
We've gone now 119 trading days in a row without a 3% pullback on the S&P 500. And that's the seventh longest streak without that kind of a pullback historically, going all the way back to the 1950s. And when you look at those streaks, we've returned like 28% before today.
Let's zoom in on who's feeling the pain and who's holding up. Major tech names like Apple, Nvidia, AMD, Amazon, they all took heavy hits today. Even semiconductor and AI-adjacent stocks faltered as tariffs threatened chip export flows. On the flip side, a few defensive names in certain industrials are relatively stable. Boeing, though down 2.4%, actually outperformed many peers today. Still, when the market's blood red, few places to hide.
It may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I'd say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is concerned, but as your other guests have said, especially Rick, unless there is a real structural change, this pullback is a buying opportunity.
In my view, this is where we see the fault lines between sentiment and fundamentals. Yes, tariffs and headlines drive short-term panic, but underneath economic data is mixed, inflation lingers, and rate cuts are being priced in. The real risk, overvaluation in tech and AI. Even the Bank of England is warning about an AI bubble now. And here's something notable. JP Morgan's CEO Jamie Dimon says he's far more worried than others about a potential 10% plus correction. That's not small talk. When institutional heads start ringing alarms, you pay attention. So, what should you be doing right now? Tighten risk. If you're heavy in tech, consider trimming exposure. Look for bargains. Sell-offs often create opportunities in quality names. Stay informed. Tariffs, Fed decisions, economic data will all swing markets again. Now, I want your take. Do you see this as a dip to buy, or the start of a deeper slide? Which stocks or sectors are you most worried about? Drop your thoughts in the comments down arrow. If you found this breakdown helpful, tap like and subscribe so we ride the next wave together. Markets will bounce, but only if you're ready. Let's stay smart, stay sharp.